Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is November. And it is a big week, okay, because we got the non-farms payroll, and we got the FOMC, and we got OPEC this week. So, yeah, and, oh man, FOMC is going to be interesting because the market is starting to price in like rates. So, for instance, Goldman Sachs investment research has come out saying that they've moved up their expectation of a rate hike to June of next year, which is a lot further forward than even what some of the most aggressive Fed estimates are. So either the Fed's going to have to come in line or the market is. So it could be a big week here for this. Although it looks like, at least initially on the open in the treasuries here, we're moving up. Anyways, so I got some cool stuff to show you, but let's go into the charts first. S&P 500 up pretty good overnight. That's really good. That's looking nice. Yeah, I had a pretty good day on Friday, rather, too. There was some points on Friday where this was starting to look a little crazy, but then they came back and then gamma squeeze up. So, like, yeah, it'd be like that. All right. And here the yields were coming back, by the way. When they did that, a little bit higher today, but more interestingly, it looks like maybe some steepening coming in. So that's going to be kind of the big question going into it is, do they steepen the yield curve or not? Okay. Oil is going higher. Goldman Sachs still has a target of 90. All right. Natural gas, though, is still cooling off, although there was some. I recall there being some drama over the pipeline this weekend with Russia not putting stuff through it. So I'm surprised we're not seeing more of that in oil and natural gas. Gold took a hit, man. Gold took a hit on Friday and lost the 1800 again. I mean, how long have we stuck around that and had difficulty holding it? But I bet you that they come back up above it eventually. And copper's still looking a little sad. Over to the currencies, we got Bitcoin. Bitcoin having a bit of a flash crash and recovering. Oh, you know what? We're not getting the weekend. We're not getting the weekend action there. We need to roll over because it is November. Yes, sir. Roll over. Come on. There we go. Okay. So now we can kind of see. Yeah, okay. So before the weekend, there's a little bit of a flash crash. Since then, they've been going sideways. And the dollar was able to get up above 94. We'll see if they see some support there. But that had kind of been holding them back for a while. But now they're back above 94. Good morning, Win. Hope you Halloween. Yeah, we did okay. I had a sleepless Sunday night, and that's why I'm here. Oh man, you know what? I didn't sleep very well last night either. I don't know what the deal was, but hey, I got something super cool to show you guys. Let's see. Hopefully it still works. Hopefully it didn't break overnight. I'm a little nervous about it breaking overnight because, well, I don't know. It took a long time. There's a look at the screen. Look at the screen. Look at wait. Huh? Is that not cool? Is that not cool? Still showing Friday's numbers. Apple isn't down 1.82% this morning, but once the market gets going, it'll update and should be cool. So I think there's still some work to do on it, but I'm happy with it. There's just one problem though, is that for some reason the top of the LED panel won't do red. And I tried troubleshooting the hat and everything, and I just can't. So, but you know what? It's fine. We'll just have the bottom and the top will just not have red on it. But the bottom we can have red. So I'm trying to figure out now to make it so that like when it's negative, it'll be like orange, and when it's positive, it'll be like green or blue. But the library that I'm using is a little bit limited in that respect. So I think I'm going to have to do something where like I output it to a bitmap and all that kind of noise. But just this took me a long time to get it like a really good font that looked good and everything. So I'm stoked. It took so much time to make too, by the way. Oh, it was hard. Okay. So here in the micros, we've got to oh no, that's not what I want. We've got to update things in here, right? 2 year, five year, $10 and 30 year. Okay. The 10 year is looking like pretty okay liquidity this morning. Oh yeah, let's turn the robot on. Let's turn on the robots. So let's see here. We do have some bill auctions today. That's not going to work. The day running really looks cool. Thank you very much. I'm super stoked. I had to move the camera a little bit so that you could get a better view of it, but I think that the new view looks good, yeah. And I sharpened things up a little bit. So after that initial little spike up, which does appear to have been driven by some buying in the 10-year, it looks like they're coming back, and we'll see. I'm thinking that the market should be pushing for higher yields going into the FOMC, because that's what the research firms are seeing. But we'll see. Maybe some people think that the Federal Reserve is still going to be dovish and holding back, and thus not concerned about it. Because that's what it is it is saying concerns over inflation are going to push yields up. That's the trade. What Finex is going on about Tether again this morning. Tether's going to try and push tethered gold after a stablecoin report. They'll probably peg their reserves to gold instead of dollars and claim tethered gold is fully backed by reserves. Okay. The President's Working Group on Financial Markets is expected to issue its much anticipated reports on stablecoins at 3 p.m. today. An official involved in the report tells MM. I don't know what outlet MM is. Stablecoins, a type of virtual currency whose value is tied to another asset, most often the dollar, have been on the top of the list of cryptocurrencies drawing attention from regulators in recent months. One of the key questions ahead of the report: will regulators require private stablecoins to be backed by strong reserves? What else to expect? Nellie Liang, Treasury Undersecretary for Domestic Finance, said last month the report will devote particular attention to risks that could arise if stablecoins become a widely used payment method. Okay. 3 p.m. Eastern time, I'm assuming. Let's see here. And then Binance. Today, we have temporarily disabled all crypto withdrawals on Binance due to a large backlog. Rest assured, oh boy. So, there's a huge risk event today in cryptocurrencies, and Binance will not allow you to withdraw crypto. That's a little crazy. That doesn't necessarily mean that they know what's going to happen, but maybe just that they know that there's a risk, right? I tried pulling the microphone a little bit towards me there, and the whole thing just went. Captain's Price says Neo says it delivered. Yeah, I saw that. They were on the list up here. We'll see if they're on the top movers list again when the markets open up, huh? Let's see what you're saying here. When? In terms of the substance of the report, we expect a fair framing of the benefits with potential drawbacks, as well as a number of policy recommendations. Isaac Boltanaski, Director of Policy Research for Brokerage BTIG. Oh, they're down 3.7. Yeah, my ticker's not going to show us. So you know what? I had a really difficult time finding a good framework to do this on, and I just ended up using Yahoo. So it's Yahoo's not going to show you pre-market moves, right? Unfortunately. But the whole thing was just having a query to return the most active stocks that day was, didn't find very many of them. So I thought Yahoo's was pretty good. That's what I decided to use. It's not perfect either. You'll note here when it gets to the end of the list that it will kind of pause for a second, and then it will keep going because I haven't built in an asynchronous call. I kind of need to determine how far in advance before the end does it need to start fetching it. There's quite a number of things that I think we could continue to do with that. So, but it looks good on camera, don't you think? Oh, I hope people come in here and they're like, oh man, yeah. See, did it just pause there? Yep, it did. Now it's going back again. I'm hoping, like new people will come in, they'll see that and they'll be like, oh my god, this guy is super serial. Oh yes, I was reading Twitter. Bitfinex, da 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 da. The beauty of physics is that it can rigorously predict things nobody has seen before the emergence of any empirical evidence, compared to fraudulent fields like psychology that overfit from naive empirical evidence to predict nothing. Ooh, done. Is this a new video from Taleb? No, it is not. I love how he starts out all of his videos, friends. I like that guy. I don't get why some people hate him so much. Oh, and then now Bitfinex is laughing at a post on Medium. USDC is losing points in stablecoins race. Hey, you know what? I should start posting stuff on Medium, don't you think? I think so. I think that's what I'm gonna do. Because he is from Lebanon? I don't know. Well, I mean, I think the issue is that he will take a position on an issue that they disagree with, and you know, people turn into this like, we've got to stop him. I don't know how to say. Okay, so now that we tick down to 14, we can see this huge order at 09.5. Okay. That's okay at 14. The 5-year took a step lower. The 10-year has not yet. A visual explanation of algorithmic stablecoins? Oh, it's gonna be so interesting, because I don't think that it's gonna be, oh, we went and did an investigation and Tether is not backed. I mean, we know that already. No, but they're probably going to go through and they're going to say it's things like, here are the risks involved with these stable coins and what happens when they crash and what happens if Bitcoin crashes and the impact that it can have. And what do we need to do in the government to protect consumers and the economy is what I think it's going to be. And because it's the president's working group, right? That means that this is like the chairs of all of the different committees and stuff. So like all of this stuff that they've been talking about for weeks, you know. Okay, now 10-year hits a new high, or sorry, new low. Yeah, so this could be a big deal. But since we don't know what's in the report, we don't know how, you know, it could be really, really bad for Tether. But I actually think it might be okay. Like in the short term, because what people will say is, okay, the government, it's gaining legitimacy and yada, 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 yada. And I think that the main problem here is that the Bitcoin people don't see that the only reason that Bitcoin is where it is because of fraud from Tether. And there's kind of this whole thing about, okay, so do they figure it out and the market crashes? Or is it kind of a slow realization until Tether gets in line? And, you know, I don't know. In that case, do we necessarily have to have a crash? I would be leaning towards still you would crash, because there is some leverage that's going to have to come out of the system. But we'll see. We shall see. Let's come back up here, make sure we're getting the latest stuff on Twitter. Okay, cool. That heater turned on again. I just need to do something like apparently the vent that I have on here just isn't enough to prevent the air from coming in. Because as soon as that heater turns on, I'm like dying. Okay, that was a little bit more aggressive as they ticked down to 14. They didn't fall through, but when it flipped, it seemed like people started to get excited. Look at how much that bid at 14 is adjusting. I don't know. Usually, when we go down, not usually, but I've often seen when we have down moves in treasuries that it kind of goes with a whimper. It's like it'll go through these prices with not very much volume trading. It's very different from on the upside. When there's on the upside, it's like stop, run, and it's all crazy and all, right? Well, right now, you're getting some heavy volume here. There's somebody is absorbing a lot at 14. But, that's not kind of the usual thing. So I'm kind of wondering if maybe they're going to absorb here a little bit, and then later on it'll fade down kind of without warning. Now I'm checking the correlations here. Do see, well, gold is trying to move up. So we'd be watching really carefully. If the yields do rise here, does gold take another hit? And meanwhile, the 6J is still kind of just there. So if we do have a move down, it might come in the 6J. We'll see. And are we seeing steepening? We are seeing steepening in the 10-year portion of the curve, not the 30 yet. Oh boy. Somebody died on the interstate here close to my house. Treasuries falling, money pulling from the market or going. Oh, that's a good question too, YouTube Finance. I think that, well, okay, so to the point that I was saying that it seems like there's some volume selling it here, and often when we see the treasuries move down, it just kind of goes with a whimper, like the bids pull and they just fall through, and you're like, what the heck? Why does it keep going? Well, I think that the action that we're likely to see for the next 3 days is people placing bets in anticipation of what is going to happen at the Federal Reserve meeting. So I think that we should expect to see some market selling, yeah? I think that we should expect to see some money come into this market. Now, on the split side, if they decide to buy it, and that's a very real possibility, because again, the market seems to be trying to price in a more aggressive Fed because of inflation than the Fed's latest predictions are. So they're saying that between the last FOMC meeting and now that there's been a change, that they've decided that the inflation isn't so transitory and that they're concerned about it, right? But maybe somebody comes in and puts a bet that says, no, the Federal Reserve is going to keep rates low because they have to, because Congress wants to spend and all of this sort of, all these things. Policy mistake, that sort of thing. They could buy it, and probably there are a lot of people short. And you could see some crazy stop runs if it comes back up. And even on the other split side, if we do get a solid trend down, I think that there will be pretty steep pullbacks. You can see they're nibbling. So that was a new low again. Oh no, wait, it wasn't a new low. They've only traded 142 at 13.5, huh? But that wasn't the first time that they traded it. We should also keep an eye on the E-mini here, because the E-mini has kind of been in a downtrend. Now, that was pretty quick. Pretty quick trade through 14.5 and maybe now even 15. Nope, did not like that. You know, another thing is that considering how we went, I should have seen the yields go up a little bit more than they did, shouldn't we? I think I'm feeling a little nervous here because my heart is pounding. Thunk, 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 thunk. I mean, I have a high heart rate anyways, but I think I'm feeling a little bit of... So feeling a little tense here. We should also try and pay attention to who's leading here. Because if we're going to get a steepener, I want to see the 30 lead, but fundamentally speaking, the 5-year should be more sensitive to it. So the way that the yield curve goes here might have more informational content in it than the actual yields. What's Ed Morrissey from Hot Air tweeting here? As I warned in September, Joe Biden has become trapped in a confidence crisis cascade of his own making, and the decline may be accelerating. Biden at 54%, disapproval 71%, wrong direction in NBC poll. Quote from the poll, what people voted for was stability and calm, added fellow Democrat pollster Peter Hart, and what they got was instability and chaos. Yes, this is a good point. After a president like Donald Trump, the correct political move is probably not to try and push a radical agenda the other way. Elon Musk calling the UN's bluff was my favorite turd in the shit pile over the weekend. Oh my gosh. That one was, that was interesting. You know, this whole tax thing, like the billionaire tax and everything, of course, it's probably not going to happen. And of course, I think that it's bad policy, but I'm actually really excited that we're having this discussion and that they're having like the epic debate about it. And I'm glad that somebody like Elon Musk is stepping up to the plate too, right? Because, you know, it would be really easy to just kind of hide. If you give me $6 billion, if you prove it, I'll end world hunger. Yeah, because they get plenty of money. All we need is $6 billion, and you get the $6 billion, and it doesn't do anything. So the problem isn't that they don't have enough money. It's bigger picture stuff. It's infrastructure and government corruption in third world countries and these sorts of things. You can't just throw money at it and solve world hunger. And Elon Musk knows it because those guys are all involved in those kinds of humanitarian things, right? They've constantly got people trying to get their ear on things. Yeah, well, you know what the thing that I find kind of funny about the debate that we're having is that these guys on the left seem to think that the people on the right and the billionaires, et cetera, don't know anything. You know? They think that it'll just be like, oh, guys, there shouldn't be billionaires and we should put that money into more effective causes, and everybody will just go and say, oh, I never thought of it like that. You're brilliant. I'm so glad that we have you to tell us what to do so that we can make our society a better place. That's what they expect you to do, right? That's how I feel, at least, that they act, right? But then it comes out and it's like, actually, you guys don't know squat what you're talking about. Okay. Yeah. Make Elon Musk sell all of his stock and see what happens to the stock market. Has an impact. It's not insignificant. Do you use I am using a Yahoo's API. Yes. How did you guess that, Manu? Or were you listening earlier when I said that? Or did you just know that that's what Yahoo is posting right now? But yeah, I'm using the Yahoo Fin Python library. If anybody has a better API that will give me a list of the most active stocks or the biggest gainers or something like that, I'd love to hear it, because I feel a little uncomfortable using the Yahoo API, because it's kind of like Yahoo doesn't support an official API anymore. So like, it's still there because they use it for the website, but it's like not officially supported. So that kind of makes me, I would prefer to use something else, especially if I could get maybe somebody give me market data and like sponsor it or something. But look at what happened during Carter's years. The tax rate, the billionaires still had enough money to invest and buy art at ranches. Yes, but there was also, a lot of concerns around inflation. The thing that really bothers me about this, what was going on right now, is that this is the supply side argument, right? There was the 70s. We had excessive inflation. The conservatives said, well, this is why you're getting inflation. It's because the supply side can't keep up, and we need to put more stimulus towards supply side. And so they built this whole science around supply side stimulus, and the Democrats didn't like it, but it worked with Reagan at the very least. And they've spent all of these years arguing over it. And so now, finally, after all of that, they get back to a position where they can put the stimulus into the economy the way that they want. And what happened? Oh, exactly what the supply side guys have been saying all along, that it results in inflation. Now we'll see, because it's still early on, but that's kind of the argument here. Anthony, hey, thank you for your donation. Sounds like Shiba Inu and Dodge are going to the moon again, with Elon Musk announcing he will accept students paying Dodge and Shiba through. I didn't see anything about that. The big news that we're watching for now is that the President's Working Group report on stablecoins will be out at 3 p.m. Eastern Time, which is a very big risk event for cryptocurrencies. And we'll see what happens. You see, there you go. The one says, I'm arguing from my own perspective. I voted for Reagan and we had trickle. Wrong. Reaganomics was not trickle down. You got to understand there's a fundamental difference here. Okay. Trickle down economics is the government should give rich people money directly into their pockets, and then hopefully those rich people will invest it and it will end up in the pockets of everybody else. And what we have learned is that doesn't happen. Mainly because the regular person doesn't benefit from the stock market going up or whatever it is as much as rich people do, and they can put it into other private investments. Basically, the money just doesn't get to where you want to, right? Like, you have this whole ecosystem, right? And it's needed over here. You put money in over at the top. That doesn't mean that it's going to come over here, right? You need to just go and put the money over here. And that's what supply side economics is saying, is that supply side economics is saying, here's your whole economy. There's a supply side and there's a demand side. And if you put all of the stimulus into the demand side, then the supply side can't keep up. So you should target your stimulus towards the supply side so that they can make more stuff. And when they make more stuff, that actually results in actual demand. It's a different argument from supply side economics. And the Democrats and all of the politicians have a really, misrepresented their argument here for 30 years, right? And so because of that, now we come back into exactly the kind of crisis where this supply side stimulus would have been needed, and it's so they've been so effective about it that nobody's talked about it. Like honestly, why aren't people saying, well, if you had done this policy and this policy, that would have allowed the ports to build up their operations. That would have allowed the ports to, invest in better technology and hire people and be prepared for when this huge demand flood would come. And they're not. Instead, they're just completely flat-footed. And they're like, oh, no, what's going on? And then on top of that, everybody's just kind of like confused on why there's supply side constraints anyways. And, the logjam at the ports and everything. There's all these people on Twitter trying to uncover some sort of a conspiracy or something. and then there's the Biden administration. It's like, I mean, there's only so much they can do. So I got into this argument with somebody, and I think they proved me wrong. It was over Pete Buttigieg, right? Because he's the Secretary of Transportation or whatever. And, we're experiencing a shipping crisis, and he was on paternal leave. And so he was being criticized for that. And they're like, what exactly do they expect the transportation department to do? And I'm like, well, if the transportation department can't do anything, then why do we even have it? But apparently it's not. What they do is more like building roads and doesn't really have anything to do with anything that could help in the short term. So it's like, what can you do? Well, you could have done something with legislation, but you missed that opportunity because you only wanted to do demand side stimulus, right? And think about it. What was in all of these stimuluses, right? It was all about putting money into consumers' hands, right? Extending the unemployment. Those were like the big things. And then small businesses, right? There's all this stuff for small businesses, okay? But there was nothing there to specifically address supply side stimulus. It was not trickle down. You've been lied to. Are you in favor of paternity leave? Oh man, did you see that they took that out of their bill? Although I'm unsure about what the specifics of that were. Was it like that companies had to pay for 6 weeks paternal leave? Or was it that the government was going to pay for it? Because I could not, for the life of me, understand why Congress would take that out. That if there's like anything in that bill that people would be like into, you would think it would be that, right? Because Donald Trump's daughter was pushing for that, and they were pushing for that during their administration. Like, that should be like a bipartisan issue. Every grandparents will download Coinbase to buy Shiba to pay for university for their own grandkids. When I go on the forums, I see a lot of people complaining about the meme coins, saying, the meme coins are distracting from other projects that have more utility. And I actually think that this is exactly what we should have expected. It's so obvious now that I'm kind of sitting here going like, why didn't I put as much as I could into into meme coins during the last downturn? I mean, I've got the garlic coin, but I could have put some into Shiba, for instance, because orders move price, right? Orders move price. Now, where are those orders going to come from? Well, one reason that orders come in the stock market is because of expectations of future cash flows, right? Like in a bond, that that the bond is going to pay out a certain amount in the future, and how much that pays out and the overall competitive marketplace determines how much, demand there is for it, right? Or for stocks, there's future earnings. In Bitcoin, there isn't anything like that, right? But it was a currency. So if it's a currency, then people will want to buy it so that they can use it, so that they can buy things with the currency. And supposedly there's all of these advantages of having the currency, that it's not deflationary, and there's extra utility to it. And those were all of the arguments that they were making, right? And then in 2016, 2017, they came along and they said, no, we don't actually want people to use it. We want to make it as expensive as possible for people to use it so that they won't actually sell, is kind of where it came down to. And ever since that time, Bitcoin doesn't get used. There's all of these retailers out there that were adding support for Bitcoin. So maybe there'd be people buying Bitcoin so that they could buy stuff on Steam or wherever it was. And what happened after 2017? They stopped doing it because it was too expensive for them. It wasn't practical. They killed transactions on the blockchain. So if use of the currency isn't the primary driver behind movements in cryptocurrency, then what is at that point? And the only thing that I can see is the anticipation that other people in the future will come and buy it from you. At that point, what is the biggest driver behind a cryptocurrency? Marketing. It's all marketing. And you should go and buy the coin that has the best marketing. And that includes that if somebody is creating a shit coin and they're just going to pump it and they're going to pay social media influencers to buy it up, and it's totally a pump and dump, but guess what? That's going to be the one that's going to do the best because it has the best marketing. So it was inevitable. It was inevitable that we were going to see this. And of course, what will happen is they'll continue to go up until there's nobody else left to get in, and then it's just going to completely collapse. And SHIB will probably take it on the nose the most. Stimulating supply or demand is just an anointment for a short-term solution. The same way people quit their jobs and because they get a stimulus supply side will take that money and provide some subprime products. Well, I think you have a good point, NASDAQ trader. No, I think you're probably right that the biggest issue with stimulus in general is that it doesn't always get used the way that it's intended. Now, maybe that comes down to better legislation, but maybe it's just not possible. I don't know. But what's your alternative, right? I guess we will let the economy fall more during the pandemic and still be coming out of a recession right now, I suppose. Is that we wouldn't have these other problems that we're talking about, but the stock market wouldn't be as high, the economy wouldn't be as strong. So would it be worth it? I don't know. Seems like no. Okay, so I are seeing yields rising even though the 10-year is still roughly about where it is, because now a steepener has come in, right? The 5-year is moving up, but the 30-year is now pushing new lows. So if I was in the 5-year, I would not be buying it, right? Because they're gonna steepen, but it's gonna move down. No pain, no gain. But I feel like that we experienced reasonable pain during the pandemic, though, right? I don't think it should have come back as fast as it did. I do think that they kind of overstimulated the economy, yeah, but. But like, that's the whole thing. You come in, you overstimulate it, and what is the negative effect of it? You'll have a really strong rise at first, but then things will flatten out. And you'll go sideways for a really, really long time. And the question is, like, is that going sideways for a really, really long time so negative as that it's better to just let the economy collapse a little bit? Not so sure that it is. But we'll see. Because if this leads us into a 10-year period like we had last cycle, where we're like in this perpetual, I don't know, how do you say it? Like an interest rate cycle that's just really, really long with slow growth. But unlike last cycle, the stock market isn't continually moving up all the time. If we got into a situation like that, then maybe some people would say that, yeah, it wasn't worth it. Excuse me, I'm getting some burps here. What's this, Anthony? The exact title is Elon Musk laughs at Edward Snowden's tweet series about SHIB and Dodge. Does Elon Musk got a thing against Edward Snowden now too? When Shiba came out, I made a simulation with a Cat 12K. Well, I just can't imagine the mindset of the people that bought into SHIB and held it, right? But like, again, you got to remember, orders have impact. Impact of orders is a lot stronger than people realize. So you can have a move up in a meme currency like that and not be anything. Like I'm not kidding. Again, look at Garlic Coin. Okay, it hasn't really gone much far since, it hasn't moved, but it did have a pretty crazy rise at the beginning of this year. And when you look at that rise, it was not a lot of money. It was not a lot of money at all. In fact, there was like that move to like 60 cents and then all the way back. And that wasn't even that much money. I think that the person that was selling in that case only made like $10,000 or something like that. Yeah. If somebody came in and put $1 million into Bitcoin, into Garlic Coin, the impact of their buying would probably take them to like $5 or beyond. Like, it would be really obscene. Because you'd be taking what you got going on in SHIB coin, but then you would be applying it to a coin that doesn't have as much supply, right? But the split side of that is it's going to do the same thing on the downside. And there are very clearly some people manipulating SHIB higher. And what do you think is going to happen when they take their profits, right? Remember that guy with Dogecoin, like he became a millionaire through Dogecoin? I don't think that he ever sold. But I mean, if he did sell, it would hurt price. It would have an impact. That's enough. It would, it would cause at the very least, a short-term pullback. The Babylon Bee, Kamala Harris proposes dropping kids off at school when they turn 5 and picking them back up when they turn 30. Well, 30. Oh boy. You think that Tesla will stop rallying today? No. I mean, Tesla's another good example of this principle in action, right? It's the popular stock. What can stop it? Only thing that can stop it is if people start selling it. But who would do that? It's the reason I think anybody would ever have to sell Tesla would be like a recession or something, you know? The more parabolic it is, the more fun. But the thing is like when you've looked in this market, what happens? Parabolic moves come back and lead to further parabolic moves up again, right? We've seen Tesla has been doing this. This is like the 6th or 7th time that Tesla has done something that's crazy, right? And Shiba has done something that's crazy. Although I don't think that Dogecoin is quite to its previous peak yet, right? Yusak thinks that we are in a recession? No, not by the technical terms. The technical terms would be 2 quarters of negative GDP, which we are not even close. What do you think of Facebook's new name, Meta? Oh, I think it's a terrible move, to be honest. So everybody thinks that Facebook is doing it to try and rebrand and get away from their bad name. I don't think that that's it. I think that Mark Zuckerberg is really just enamored with the idea of the metaverse, and he wants to be the person that makes it happen. I think that it's a genuine case, kind of like with Elon Musk and what he's done with SpaceX, right? It's a genuine case of a geek wanting to geek out on something. The problem with it is this. Number one, like Facebook, the website is still going to be Facebook's, so you call the company whatever you want, it doesn't matter. Number two, their logo is too similar to other people's logos, so it's not really very memorable. Number three, I kind of think that the metaverse is overhyped. I honestly think that the metaverse is overhyped. Not that it won't be cool, but it's just like, okay, these games where like you own a virtual space and an avatar and you can create these spaces, and okay, it exists. There's Second Life, there's Animal Crossing or whatever it is that they have on this. Like, this kind of game has been around for a long time. Okay, so if you take that kind of game and you add VR to it, does it really change anything? I mean, there's a VR chat. Is VR chat really truly revolutionary? I don't think it is. Because I've done a lot. Like, I'm really interested in the metaverse, don't get me wrong. Like, I'm super interested in it. But I think that it's something that like hardcore geeks like myself will be into, but I just don't see it becoming mainstream. I can't imagine the majority of the public, you know, when they get home on the day, putting on their VR headsets and going to a rave as a cat girl. I don't see it, guys. I don't see it. So this whole push to become like this huge moneymaker in the metaverse, I think is going to fall flat on its face for Facebook, and it's going to hurt them in the long run. Yeah, no one is going to call it Meta. I don't think that they're going to change the name of the website, right? And I suppose the one advantage that they will have is that it will be a combination of VR chat, Second Life, and Facebook. But I'm not so sure that everybody's going to be into that. Because first of all, y'all going to have to buy VR headsets, and then y'all going to have to get over the weirdness of everybody in the world being a cat girl. Because that's what they all do. And then I think another thing that they're looking at is they're like, well, what we can do is we can have these virtual spaces for like companies to do business in. Nah, I ain't doing that. No way. No way. I'm not going to go to business with my cat girl avatar. Have a professional, you have different, there's business casual avatars, and there's, that's what it's going to be like, right? But no, I think that a lot of people like the whole Zoom thing where they can just sit there and listen to it and mute it. And if they don't have to participate, because most people don't, then, having the whole thing of you like being there when really all you're going to be doing is sitting there doesn't really make a whole lot of sense, does it? So I think that there's a lot of things like they're trying to force the metaverse to be something, and I don't think it's going to work. It's the metaverse would have to be something that evolves organically, and the killer use cases are probably not going to be what we at this time could predict. Hence the guy who had to say, I am not a cat. I think the cat thing makes perfect sense. Once upon a time, YouTube content was pretty much just cat videos. Avatars can get a great market. Well, yeah. Well, and there's the other issue is that there are a lot of these guys are getting excited because of NFTs, right? And you got to understand that the NFT marketplace is fraudulent, right? You're seeing all of these big dollar transaction amounts going through, and everybody's getting excited about that. But most of that behavior is wash trading. And here's the thing: if you're talking about a metaverse, especially if it's like a metaverse created by Facebook, then you're just going to have a Facebook central authority anyways, right? Like they'll have their own currency, Deem or whatever the deal is, but like what is the purpose of it being a cryptocurrency, right? Like other than that they want their own, right? They're enamored by the buzzword. They don't actually understand the concept behind it, right? And here's the thing. You go and look at like digital economies, like Diablo's probably a good example. In order to make people want to play the game, it kind of makes the marketplace useless most of the time. So if we had a metaverse up right now and they were doing all of this stuff, assuming that it wasn't a situation where you can do this wash trading nonsense, you wouldn't be seeing prices as high as the NFT market. So I don't know if it will actually hurt Facebook's stock because there's other reasons to own Facebook and institutions really, really like it right now. But I don't think that the branding is very good. I don't think that the rebrand is very good. It feels forced. And even then, if Facebook were to be successful at creating the metaverse, I don't think anybody wants them to own it. Right? Like it's going to come out and it's going to be like, there's Facebook has their metaverse and Epic Games has their metaverse. Guess what? I'm going to the Epic Games metaverse. I'm just saying. Even though Epic Games is probably, has their own problems. Okay, by the way, that was a new low by a tick, but the yields are continuing to rise here. I guess in part because the 30 is going here so hard. What would live streaming look like in the metaverse? I feel like it looks something like a media conference with a streamer at a yeah. But like again, it's like what benefit would the metaverse provide to us in doing a stream, right? Because to me, the thing that's beneficial about a stream is that you can look at me, right? And we're actually having a genuine interaction here, and it is a genuine interaction, but it's kind of an interesting kind of interaction that you wouldn't normally be able to have in real life because it's all of you interacting with me, with one person. And how do you do that in real life? It's really hard. You know, like you can have a speech, but you know, that's hard. You don't have the speech where everybody can still say stuff and the person giving, you know, it's a unique thing. We do it in VR chat and I can see all that wouldn't necessarily be a thing, right? Now, what would be cool is if we created an exchange in VR chat so that you could have a true floor. You could have a true trading floor again. I think that there'd be some real benefits to that. And you could combine the best parts of both floor trading and electronic trading. Like, you know, you could still have queues and things like that. But you would be able to see who's doing what and stuff. And you'd be able to speak to the other people in the market. Like, I can see some real advantages of moving over to VR trading, right? So that's kind of gets down to where it's like, I think that the use cases where this is actually like useful technology are not going to be apparent to us at first. But if I was in charge of making the metaverse, that's the first thing that I would do is I would make a virtual exchange trading floor. And then you have all of these, you know, it'll be great, dude. You'll have all of these Ugandan knuckles in business suits buying, you know, commodities. You know that's what's going to happen, right? That's what it's going to be. You'll ask 15 ticks on the S&P. Were you holding long against that whole thing? I'll just have a bot take over for the avatar on breaks. Yeah, it's on his holodeck. Well, so here's another thing. Like, maybe all of the dystopian sci-fi movies have it right, and the metaverse will just be used for hedonistic pleasure seeking, you know. But the way that Facebook seems to be presenting it in their video, I don't see it. I'm sorry, I don't see it. It was working for a while. Well, you know, with you know, something that I have a hard time with trading the SPOOs, because like here's the thing: if I'm in the treasury and it doesn't move the way that I think it is, or I think it's going to, I probably made a mistake, right? Like if it's I'm generally going to win, and if I didn't, I made a mistake. Okay. In the S&P 500, a lot of it's just random, man. A lot of it is just random, especially with the size of stop that us retail traders want to try and hold. A lot of it is just random. And I think that makes it particularly difficult for me to trade. Y'all know Facebook was lifelong, right? No, I thought it started out as the Facebook. I told myself because it was a risk I'd leave at -4, -5. Well, you don't have your stops set. And I got to tell you guys, in futures, you've got to have a stop. Well, let me put that back. In SPOOs, you've got to have a stop. This is a sort of storyline of the movie Matrix. Are we living in reality or just a projection of reality? Again, going back to the allegory of Plato's cave, evolution is taking us there. Yeah. Here's the thing. I haven't done a VR headset. When I look at the VR technology, I don't think that they're quite there. So I've had more success without stops than with them. Yes, because they're lying to you, Dennis. No offense. But what happens is you're naturally taking on more risk and you're not going to lose as often. But the bad side of that is that at some point you're going to have this loser that you held too long. And in SPOOs, I'm telling you, there's going to be this situation where you're going to be long and there's going to be some headlines going to come out and the S&P is immediately going to drop 20, 30 points, right? And can you hold that? Can you take a 30-point loss? Because then have some stop. Maybe it's a really wide stop, but you got to have some stop. And if you don't have a stop, then you damn well better have a price where you're certain that you're going to put it in. If it does happen that way. It's very curious to me that the 10-year yield is not really following the 10-year price as so much as it is the 30-year price. So one thing that you can do, I'm talking about this, but I don't have a stop on right now in my micro trade here. You gotta have something like a stop limit. Well, this is just a stop, but you could have a stop limit. You could say, okay, I will stop limit there, but if somehow that doesn't get filled and it goes down to there, then I'm definitely getting out, right? The 5-year not giving it up. Well, it's spreading pretty hard, right? It's steepening rather pretty hard. Like, there was so much flattening last week, and I'm not quite sure where that was coming from. Some people saying that maybe it was, people predicting a policy error, but I think that it could have been just related to short-term liquidity needs. But now, in this environment, I think people are betting on a more hawkish FOMC and the Federal Reserve coming more in line with the market expectations. Ergo, there should be some steepening. That if it's inflation that is the concern, then the longer term interest rates should rise because of the inflation. Well, E-mini's had an okay open there. How much was it in Delta? 2,000? I'd still say that's not bad. Yeah, you see that 8,600 bid in ZN at 09.5. Yeah, when we were at the beginning of the session and we ticked down and that first showed up there, I almost immediately saw it because it was just stands out like a sore thumb, doesn't it? That much on a large bid is not unusual, but it's unusual for the last, year. And normally we wouldn't get an order like that unless the rest of the market was like 45s, 5s, 5,000, something like that. You like the mic? Thank you very much. By the way, is my sign still working here? Or did it crash? I can't see. I'm looking here. It's not moving. Let me come over here. Oh, it crashed. Let's see here. What does it say? Maybe Yahoo disconnected me or something. Yeah, it did not get what it thought it was going to from Yahoo. Oh, that's so very, very interesting. So let's see here. Let's work on this a little bit.
I'm gonna cd slash. Oops. Oh, actually, print list. Is it the case that when it's a live market, it returns something slightly different to me? It seems like maybe it does. Hmm. So the S&P 500 started off bullish, but it looks pretty ugly right there. And the Treasury's turning around a little bit. Oof. J hitting a stop there. Oh. Oh, it will only give me 9? Okay. So let's just do, for now, oh, it's up here, right? Python min. Min, here, oops, I need to sudo. Oh, okay, we did do that. Okay. We'll do the minimum of 20, comma, list dots. Okay, array size. What is that? Dot len. Oh, you pass it into len. Len of list. Nope, didn't like that syntax at all. Let's see here. I need to put it over here. I can see. Oh, I think I missed a, yeah, I did. I missed the curly brace, of course. Oh, it didn't like it. Oh, does it not like you doing that?
break it out like that. Personal income decrease. What are you talking about, Sebastian? Still doesn't like it. It must have changed. That maybe this is wrong. Oh, maybe. Okay, hold on. Aha. Aha. And now it gives us the new one. See, it's telling us adhere is down -2.34%, which is the biggest mover right now. Yes. Very, very good. Okay, we fixed it. I'm not so familiar with Python, so I'm doing that and I feel a little embarrassed, but it is what it is. I don't use Python that much. Well, the treasuries there for a moment kind of looked like they was going to back up, and then they came back a lot. Why am I talking like that? Ace is long at 06? Wait, did you not stop out of it already? Ace. Shouldn't you be out of that? Or are you saying you're not long yet? Maybe you're saying that's where he wants to get long, but he hasn't done it yet. Held your stops. Oh, so it didn't. Well, where's your stop? Where was your stop then? Did you increase the size of your stop? You didn't tell me. You don't have to tell me. 03. It touched 03. So you've got more than a 3. You got more than a 3-point stop now. You doing a 4-point stop now? He broke his stop rules. Okay. I was gonna be like, if you're been holding a 4-point stop now these days, and a 2-point target, and you know, then that I'd be a little upset. Not because I'm mad at you or anything, but just because I'm trying to figure out how he does some things. I'm like, oh well, if he's holding a wider stop, then of course it would work out that way. So I think I need to reset this because it looked to me like the ZB is just down 2 ticks and the other 2 aren't, but we'll see. We'll see. Now it goes for 2 points. They did touch 08, didn't they? Oh, I didn't realize that we were getting market menu. You know what? Okay, well, something that might help is that. Canadian, oh, it's not so high. Canadian market manufacturing 57.7. Now, we do have ISM numbers at the top of the hour and construction spending. That one is usually a little bit less of a mover just because, well, actually, I'm not sure why it's not. ISM manufacturing PMI is relatively important. Released monthly on the first business day after the month ends. Oh. Okay. So that's a risk that I am going to have to be keeping an eye on here. Because they're looking for a reading of 60. I don't know if they're actually going to get 60, though. Wall Street lenders who snubbed Bitcoin when it exploded onto the scene are now paying sweet premiums to crypto recruits. Seems to me like right now would be a good time to have a job in cryptocurrencies, but you know, I always kept an eye on them. They're in kind of the last, well, since 2017, but I just never saw something that I really was like, yeah, that's an opportunity I want to get in on. Okay, so they all 3 ticked up there. Had a little misclick there. So I'm going to get out. Get out with my $10 plus commission. Because I'm a little concerned about the degree to which the S&P 500 appears to be selling. By the way, Ace, good job on that short. I'm a little concerned about the downside leading to some flight to safety coming into the Treasury. And there's the news at the top of the hour, which I really don't think that they're going to beat 59 spot 2. Like for the market manufacturing to be higher than 60 would be like, wow. So I probably could have gotten $5 more than that, but it's okay. We're okay. I felt like I was kind of starting to lose my focus there, don't you think? Oh, well, I mean, I did the light board and all that, which that I really did want to fix, but then after that I was like, I wasn't back in the mode. Okay, so there was pretty ugly decline, but they are bouncing. I think that was proof Seth saying can you afford 30 points, right? Well, what was that? How much was that? That was like 15. Let's say from 08 to 98, 20 points. Yeah. It was pretty fast, wasn't it? But that wasn't even what I was talking about. I've seen limit moves that literally 20 points in a blink of an eye. You're gonna stop out, you're gonna catch slippage, and you're just gonna get what you want, what you get. And if you didn't have a stop in there, if you had a stop in there, then you're gonna catch slippage, and if you don't have a stop, then you're just down big. And the thing is that if you're not in the stop, then at that point you're like, well, should I let it come back up? Because that was like a crazy move. It should probably bounce. And then it bounces, it gives a little bit back, and you're like, I think there might be more. And then it crashes again, and now you're even further down. I know, because I've done this, right? The problem with the way that we scalp is that the edge that you're picking out, especially if you're relying primarily on technical indicators, the edge that you're trying to pull out is so tiny that if you have a loss, even one loss that is larger than expected can ruin the expectancy of the system, right? So you're really, you've got to do the math and know, like, this is the worst that I can handle. But this is, here's a way to get around this. Hear me out. Just know what it's going to do ahead of time, and then trade based on what it's going to do ahead of time. Right? So if you think that if you know that the S&P 500 is going to sell on the open, then you go short just before it happens, and then you'll make money, right? And if it doesn't work, then you know that you did something wrong. And I remember at the time that was tweeted Obama was assaulted. I don't know. I think the craziest ones were like the breaking headlines on trade, right? I remember that one time when just all of a sudden out of nowhere, China was like, okay, we're going to make a deal. And they had a press conference. And then the market like moved the opposite way because all these people were betting that it was a head fake or something. And they made money, like they screwed me over that day. And I think that those guys made money on that day. But then when the Monday and Tuesday came, they just got destroyed. And I remember going on Twitter and reading all these people, and I'm like, you know what? I think that all the people that bought up and convinced you to get in that trade are already out. Because, oh man, I was thinking just the other day about like, there's been so many trades and so much that has happened over the past 5 years that it kind of starts to just blend all together, and I can't remember them all anymore. But now I'm remembering that one, and it just makes me so mad thinking about it, because I had the trade and I was totally in there right, and I had this huge winner, and I was just like planning on letting it ride, and then it came all the way back and stopped me out. I get on an Axie, and all these guys are like, nah, there's no way that it's happening this way, and it's not a bull move, and yada yada yada. I was like long spoos, and then it came down and it sold back down, and then the next week it was just up 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 up. And there was all these people on Twitter saying, nah, the Chinese aren't being honest with us. And I'm like, it's going up, man. Like, whoever it was that was telling you that on Friday was short and wanted out. And they used you to get out. That's what I think happened on that one. The problem at the open range expands, hits your stop regardless of where you thought it was going to go. The market can easily make a gap even if it is open. Yeah. Well, the whole thing is that in a situation like that, you really have, like, in order to make money, you have to pick a direction, and it needs to just go straight your direction and never hesitate, right? Because if you're trying to play it as a range, like, you take it and you're trying to let it range and like eventually gets there, like, there's just a really good chance that it's going to go to your stop based on where retail traders put their stops. How often do you find yourself being convinced by someone else's thought? A lot? I don't know. I think one of the problems is determining whether an idea was your thought or not. For instance, me coming in this morning and saying, okay, I think that yields are going to rise a little bit today. Was that my thought? Because, I mean, that's what I was thinking last week was, oh, we'll have these auctions and then the rise in rates can continue. So was it my thought, or was it Goldman Sachs investment research who came out and, moved up their predictions for a rate increase? I don't know. What are you considering as well? If we're just talking about the opens, sure. I'm just saying, in the S&P 500, you're probably going to be in the situation where the amount that the index will move naturally is more than your stop. And you're going to get stopped out a good portion of the time. Getting this kind of trade where, like, you win 80% of the time in ES is becoming harder and harder to do. I'm not going to say it's impossible, but it's getting harder because the range is increasing. Okay, so they're all pulling because of the news. So I think maybe I could have gotten a better exit, but it was wise for me to get out before the ISM news. Again, we're looking for a reading of 50 spot 2, I believe. US ISM manufacturing PMI expectation 60 spot 5. 60 spot 8. So it is higher than expected, but only by a little bit. And look, the treasuries, at least the micros, not giving me good prices if I had stayed in. And the S&P 500 actually appears to be selling on this news. Well, if you had gotten that short at 99 and you're still holding, I think you'd be pretty happy with that. But I'm not sure how much further, if this is one that will actually run or not. The yields aren't backing up per se, by the way. You can see the 30-year came back quite a bit. Let's just come in here, make sure I got all those numbers. Okay, so construction spending was expected to be spot 6% and it was spot 5. In manufacturing prices was 85 spot 7 versus a forecast 82 spot 5. Okay, so even though the manufacturing was slightly better than expected, construction is not doing so well, and the prices, there's some signs of inflation at the manufacturing level. So that may actually be something where we could read go hawkish rates, but they're not really doing it right now. I think I may have just got my trade today. I don't know. I mean, this is a situation where if I could really get something to run, I might want to try and hold it through to the FOMC, but I'm not sure. That doesn't seem like that's going to happen anymore. Well, and are they flattening again here? They are. They're flattening a little bit, which is also like, so I wouldn't mind trying to go short the treasury here, but not if they're flattening. Seems like that the S&P 500 being a little unhappy this morning is kind of making the trade difficult. Is that fair? You held through that whole short, Lewis? That's I guess there was some spots where you could have taken it short, but I mean, wow. Wowie. Now on my side, Jay has just still been trying to take longs, so that's unfortunate. I tell you what, Jay, he has a good trade. He has a good trade. He really does. But I've got to program something into him to better factor in the larger term trend. I've had trouble with that, but like when it's really trending down, he shouldn't be trying to buy the dip like that. No, sir. I mean, if the S&P 500 recovers, then he's going to kill it. But Yahoo Finance tweets FOMC preview: can the Fed avoid spooking markets as it readies a taper? Breaking market news: Financial Juice tweets U.S. market manufacturing PMI shows material shortages continue to stymie output growth, but new orders continue to rise sharply. Well, if you weren't worried about inflation before. Yeah, trying to catch falling knives will get you cut, yeah. You see, I have the ability to come in here and say, well, this is only a small little pullback, or this is only a small drop, and I can buy this dip versus, okay, now this is like turning into a trend and I don't want to fade it, and Jay doesn't. So I kind of think that if I used Jay's metric for entries, that I could probably do okay. I mean, the thing is that it back tested as positive. It's just like that was because it was going long. When we get these down moves, which has kind of been more since I started back testing him, funny enough, they just doesn't work. Just doesn't work as well on the short side. How do you judge it if it's beginning? I don't know. Well, in the treasury over here, I usually have some fundamental idea about why, right? Like today, I was expecting there to be some downtrend in the treasuries with rates rising because of the FOMC. But over here in the S&P 500, like, do I have a strong reason to think that the S&P 500 will be up or down? You can't. There can be situations where you do, but it's far less common. The S&P 500 is just a lot more random. And I suppose that even at this point, we could still recover and come back to, the 4610 area. But sometimes it really does just turn into a real dismal downtrend in the S&P 500, right? And I can't tell in all situations, but I can tell at least in some situations, and the robot can't tell at all. Like, the best I can do with the robot is put a longer term moving average on there. Well, Treasury back above 15, which is about where we started this whole fiasco. If I had held that, I would be almost back to my entry. Yep, 49.48 was where I got in. So aren't we glad we got out, man? Well, I didn't get out because I thought that it was going to go back down there, but just because of the risk and everything else that I was seeing, and it was the right call. So there you go. You manage risk. Sometimes it helps you out. Yeah, everybody's tweeting this morning about the Federal Reserve meeting today. I don't know why I was just thinking about this there, but as during that silence, I was sitting thinking about it. Like, if the stream was more focused on Bitcoin, you could probably get a lot of people, right? But then that wouldn't really work because the Bitcoin people just don't want to hear what I have to say, right? Okay, here's a question. Market moves in short bursts. Technically, as an order flow trader, you need to be inside the burst, which means your stops should be small. Well, I don't know. I think that you're painting things with a little bit too broad of a brush, right? I think the thing is if you're coming in and you're taking the momentum and you're looking for 2 points and you have a 2-point stop and you don't know anything, you're just watching the market move, like that's a really tough game to play. You're going to have a really, really strong edge to, for that to really work out. And you could make it work out in the S&P 500 if you're going long most of the time, but then you're going to run into situations like this where you might have a lot of difficulty, right? But the market doesn't always move in short bursts, right? We've seen a lot of moves in the S&P 500, especially since the pandemic, that were just really long and slow trend bubble ups moves that just have a really high degree of autocorrelation and don't make a whole lot of sense in general and seem bizarre to us, but it just keeps happening more and more, right? So let's start there. I found you stop out sometimes through small dips before it goes where you want it to go. Right. So here's my contention. Okay. The market is more statistically efficient than it is informationally efficient, which means that if you were to go and do a mathematical analysis of the behavior, you're going to find that most statistical aberrations that you can find in the S&P 500 are removed out of the market, and that it almost looks like noise. There are a few properties that are not, like particularly volatility clustering, but generally speaking, it looks like noise. And the reason that happens is because when you trade on something, it moves price. And so as people find irregularities and trade off of those irregularities, they are slowly removed from the market. Okay. And to find one that hasn't been removed, it's going to have to be very sophisticated. Ergo, the market is very statistically efficient, but the market is not informationally efficient because you got these large institutions and stuff that are doing all sorts of things that have nothing to do with fundamentals but end up moving the market. So you could have a piece of information, for instance, like that the Federal Reserve is going to move up their rate change expectations to next June, because that's what a lot of Wall Street analysts are thinking. And if they come out in the FOMC meeting and that happens, and you see the treasuries sell hardcore, you're going to be like, well, shouldn't the market have already priced that in if we already knew that? But it couldn't price that in because last week was an auction week, right? So the market is more statistically efficient than it is informationally efficient. So if that is the case, then trying to trade something on a really hyper short time frame is not going to be as fertile ground for retail traders, is it, right? Because what are the situations where you have an informational edge that tells you that it's going to go up 2 points before it goes down 2 points? Maybe because there was news, but then at that point, why wouldn't you be going for more than 2 points? You get what I mean? Right? So yeah, it's just a really difficult game to play. And I think that as a retail trader, that you have a much better chance. You can still scalp and you can still day trade, but you stand a much better chance trying to play the informational game to say, here's something that the market hasn't factored in yet, and watch for order flow, indicating that it's starting to get priced in, and try and go along with that order flow. Right? And if you have an informational edge and you know what the order flow is going to look like and you see it, you go along with it, I think that's a way better trade. At least for me, I've had a lot more success with it. It's still hard here in the treasuries. I made some mistakes for sure. So if you take those mistakes out, then it looks amazing. But with those mistakes in, it's still making money. But I don't think that it completely covers all of the costs. It's really hard to pay, because costs are like now, when you consider what you've got to pay for like market data and stuff. It's hard, you have to make $100 a month, and $100 on micro treasuries is hard. But I digress. We come close. Okay. I've been doing a lot better since I started to understand that stuff and really figured out an effective way to trade that for me. Not going to promise that it's going to make you rich, but I think it helps a lot. How is our thing going? Okay, so NIL only up 0.01%, eh? Interesting. By the way, you got long at 90. That looks like a good one so far. Could come back, but so far that looks like a good trade. So now I think here in the Treasury, I might be wrong, but I think that here in the Treasury, you got to sit down and say now they seem to have balanced back out. And if you think that the S&P 500 is going to recover, then you probably want to go short again. And if you think this is going to go back up, then maybe you stay out or be long. Hearing all that and trying to put in my own words, use statistics to get in the trade and use information to decide if you should stay or go away from a trade. Well, I'm not going to get into a trade without information, but I want to see the statistics along with it, right? And when I say statistics, I mean order flow, not just price, because price is noise. But I want to see if I'm going to come in. So, for instance, we did this at the very beginning. I don't know if you were here, Gus, but remember when we were saying, well, I think that people are coming in and placing bets that the Federal Reserve is going to have to bring forward their expectations. And so people are going to be selling the treasuries, and therefore you should see active order flow selling, right? And that if it doesn't, and you should see short covering, you'll probably see really aggressive moves back, right? So that kind of explained overall the order flow that we're expecting to see based on the information. And then when I started to see it, when I started to see that aggressive selling, I went short, right? And it worked out that time. But then here again, I also knew that we could get deep pullbacks and or that there might be people trying to take it the other way. So I was way more skittish about trying to hold it and let it run. Like I was not willing to hold through the manufacturing data because I just wasn't confident enough in the order flow continuing to stay selling after that, right? It was the right thing. And what did we do? We used information to predict future order flow. And then when we saw those statistical aberrations in the order flow, we took the trades. After hearing you, I'm ignoring price these days. Yeah. So it really is noise, right? But it doesn't mean that it doesn't matter. It just means that trying to base your entire strategy off of what price is doing at the moment, probably not going to work out. And if you do get something that does work out and it works really, really well, you should go and write a research study and prove it. Because if you have something that's based purely on price and is really, truly that effective, then you have something world-changing. It's just the outcome. Exactly. Yeah, I remember seeing that the other day, but I like the way that you're putting it there. It matters for those who trade based on it. Oh, you retracted it. Come on. It was a good call. But yeah, it's the only reason that we focus so much on price is because that determines how much money you make. But the price is ultimately the outcome of the orders. So if you really want to analyze what's going on, why wouldn't you look at the orders? It's just like, for instance, let's say we can do this. Oh, do I not have my pen open? Hold on. By the way, I've drank a lot of water. What platform do you use for your DOMs? I'm currently using Trader8 for everything, but I will probably be buying Jigsaw. Yeah, I use Jigsaw. So I have an affiliate link for Jigsaw in the video description, so I should definitely disclose that. If you buy Jigsaw through my affiliate link, I do get a commission. It helps the channel out a lot, and I use that to try and make better content. There's so many things that I used to think like, oh, I'm totally good. There's not very much more that I can spend on the stream until like we hire people. But no, that's not the case. I think there's a couple of things that we can do to make it a little bit better. It matters for those who trade based on it, and you have to know what they are doing to see the game that's being played. Yeah. Anyways, so if you purchase Jigsaw, you can use my affiliate link. But I think absolutely without question that Jigsaw is the best DOM out there. I'll make sure. Hey, thank you very much. Anyway, you know what happened was you get sometimes you guys will say something that will like, you know, it'll get me triggered. Like not triggered like, oh, I didn't like hearing that, but triggered like, oh, you got into the thing that I've been thinking about and now I want to talk about it. You know what I mean? And I think about how to make this stream better a lot. Man, I have a video that I was going to put out today that I think is really, really good. And it is about reading the DOM. And I went and recorded it on Sunday morning. And then I went to edit it. And I don't know what happened, but I like got the zoom on the camera wrong and it cut off half of my head. So I couldn't use it. Oh, I was so mad. Maybe I will try recording it today, tomorrow, and I can still put it out on Wednesday. Although that's super hard, right? But I was so mad about that. But I don't know. I'm finally getting a new tripod that will help a little bit because this setup that I've got now is a little bit shaky. Okay. Anyways, so what I was gonna say. Going back to the discussion with Gus here is like, say we have this function f of x equals y. Okay. And actually it's not f of x. It's f of x1 comma x2 comma x3 dot x of number where n equals num of traders. Okay. Equals y. Okay, so if you are trying to figure out what the value of y is going to be on the next iteration, so what happens is that you get y, you get the previous y, and then you are trying to determine what the next y is going to be. Are you going to look at the history of y, or are you going to look at the history of these? To try to figure out what that is, right? We know what f of x is, okay? We know how that's basically what we're describing when we're talking about order flow, is how limit orders are matched up with market orders, and right? Once you know all of these, you know what y is going to be, because that is determinate. That never changes. That is the matching algorithm at the exchange, right? So with the orders and how the matching algorithm works, you know what y is. So if you're trying to predict future y, are you going to look at a historical data series of y, or are you going to look at a historical data series of x, of all of the x's, and try and determine what the x's are doing? Right? And I'm saying, look at x, because y is just the result. X is the thing that actually matters. Yep, y in this case is price. And this is orders. Since y is the result, if you can look at what the orders are doing, you can determine what price is going to do. And the thing that's so wonderful about it is that the way that the orders interact with each other is actually really incredibly complex, because there's limit orders and there's market orders, and a lot of it has to do with just how aggressive people are, right? So you can very, very much come in and say, well, there's going to be orders that are going to be selling, and there are going to be new orders coming in the market, and they're going to be aggressive, right? Versus there are people in a losing position and it's working against them, but there's not really new money coming into the market, and so they're just going to slowly bleed out, right? And you can make those kinds of determinations. And then if you come in and you think that you're going to get this slow bleed out where the treasuries just kind of like slowly go down and go down and go down, but instead what you're seeing is really aggressive market buy orders, then all of a sudden you have to sit there and go, well, wait, that's not the order flow that I expected. Why was I wrong? Okay, maybe there was news. Maybe, what is the situation, and you got to know enough about the market to try and figure out why that order flow might be different from what you're expecting, right? Now on this move, since I would really say, well, when did this start? Since the S&P 500 started, really? Yeah, I would say since the S&P 500 opened, the treasuries have moved up. It wasn't that aggressive. But it was a lot more volume, net cumulative delta on the upside than it ever was on the downside move that we had. So that started about when the equity market opened. So I'm going to say that this move up in the treasuries has been caused by flight to safety. That's my leading theory, right? That's how I go through it. Sometime I asked you if there's a way to know if you can tell when there is a new aggression orders, and you said that every order is a market order. I don't understand what you're saying. It is what I will say is just run with the assumption that informed traders are going to use market orders. That's less true in the treasuries, but generally speaking, informed traders want to be aggressive. See, that's one thing I'm not understanding. I've seen in instances where the majority were selling, but the price goes up. Well, but was it on the S&P 500? Yeah. So because the S&P 500 is so very, very much, it's like a derivative of a derivative of a derivative, right? Because it's an index and then a derivative based on the index. And so what could happen is you could say, I would like to buy this company, but I want to buy this company because I think that it's a really good quality company. So even if the S&P 500 goes down, I expect that this company will still perform well. So I want to hedge myself on that. So I don't want to make money on the index moving up or down. I want to make money on that stock moving up or down relative to the index. So what do? You go and you buy the stock, and then you go and hedge yourself in the index, right? Or you're doing options, these sorts of things. And so it's much more likely in the S&P 500 for you to get a move where the cumulative delta is decreasing, but we still move up. And I have seen that before. So it's rare. It's more rare. But in the 10-year treasury, it's practically unheard of. Whereas in the S&P 500, this will do it, a few times a month. But there's where I'm just saying here again, like with the S&P 500, the situations where your information really gives you a strong idea about which way the S&P 500 is going to move, I find that they're less common. There's just too many factors that you have to think about with the S&P 500 compared to these other markets. Study volume profiling if you want to understand the context. Well, I do think that volume profiling can be useful. I think that a lot of people use volume profiling as another form of technical analysis, which has inherent flaws. But if you're reading it as a history of orders, the volume profile can tell you some things, and the levels that you're going to get off of the volume profile are context that you might want to consider when you're watching the action. Like in the treasuries, if we're moving down and we bounce hard. In fact, I didn't really look at it. I'm not so good at watching these sorts of things, but yeah, so you can see when you come to the chart here, right? What was yesterday's volume low? Like the value area low, 130 spot 13.5. So it looks like in that case that there was somebody probably absorbing some contracts down there and that we bounced off of a technical level. Although I would still argue, just based on, see here in the bottom middle left, this is 1, 2, 3, 4, 5, 6, the ZN right there. Oh, it's so hard because they all move. Where did my thing go? There it is. Right here. That's when the treasuries turned up, and guess what happened right there? S&P 500 opened. So that's the strongest evidence that I have suggesting that it's risk-off sentiment. I don't really see anything in the other correlations here, so could be a risk-off sentiment. But we should just note that the 10-year did bounce off of the critical level. So one thing with the S&P 500 I found is I'm ridiculously more successful trading in nighttime versus trading daytime. I feel it's more predictable and tables make sense during the day. God knows. Yeah, well, how many times have we seen situations where like we think based on information that a certain thing is going to happen, and then the equity market opens up and it doesn't do that, and it's just difficult, and then in the overnight session it goes and it prices in the thing that we thought was going to happen anyways, right? There's like this there's this dynamic, it seems to me, in the S&P 500 where when there's everybody out there trading, that it's just difficult. That they just make all of this noise, that there's a lot of people out there doing stuff that wouldn't make any sense at all, but hold the price simply because of, well, who knows, but maybe it's just arbitraging out statistical abnormalities. I don't know. You say the extended trading hours is a different game. Yeah. Well, I mean, there's still the market making algorithms and stuff. I think it is the case is that there are a lot less informed traders during the overnight session, but the ones that are there are the guys at the institutions, right? It's like the difference between the institutions versus the U.S. retail crowd. And ever since I've been in here, at least, the U.S. retail crowd does crazy things. I don't know how else to put it. They do crazy things. Well, I tell you what, we've been chatting on this for like 10 minutes now, and that felt like an hour to me. Did you ever get that? I must have been into it. I don't know. I've tried playing these games, but have you noticed how since let's say August, have you noticed how it's since August? I get really frustrated with the S&P 500, but it seems like I'm always catching something in the treasuries. Like I'm getting a pretty high win rate in the treasuries. And the ES is just like, I think that in the ES it actually was money too. Actually, let's come look. I'm gonna go look. I think that in ES, if I go since August, that I do have, it is positive, but that's probably because of some like outsized winners. All these years in the futures, I call this new type of trading crowd a bunch of mouse clicking freaks. Fire away at anything that. Oh, right. So hopefully we'll get there when I put this video up. But one of the things that I talk about in the video is that when you're starting out, you tend to get excited when you see stuff moving and you see the volume coming in. And you have to understand that especially when large orders go off, that can actually constrain price. And it actually often means that you missed it. So my back's a little twisted. I need to work out today. I'm looking forward to working out today. Total gain loss. Oh, that's interesting. Okay, so only MES trades. So that will take out J. And then if I go all the way to August, so starting from August until now. Yeah, it is. Oh, that's actually really good. Wait a second. No, what? Here, I'll show you. It wasn't that good. I was really frustrated. You see, that was the day the other day where I was really frustrated. And that day I was really frustrated too. Well, it probably is from some outsized winners, right? Because I caught that one on the 6th and that one on the 10th. But let's just look at the stats, okay? So I am... Oh, yeah. See, it's still not quite what I would like, right? Losing almost 57% of the time. Almost 57% of the time. And it's just that my winners are like twice my losers. Especially when I'm taking some longs. So it really is the case that I just a few little trades that are winning. Whereas if I come over here and I do my 10-year, yeah, okay. So you can see where I made some mistakes. Those two trades right there were my spread trades that were just dead wrong. But then since then, it's been good small little gains, right? And you can see, oh, actually, it says that my winning trade is only 37.7%. I guess I've been trying to go for longer winners. Large orders can constrain price, yeah. So a large transaction where all of the sudden 5,000 contracts in the 10-year treasury trade all at once in some random spot is not a signal that all this is bullish, buy it and follow it. It has such a detrimental effect to the latent liquidity that is actually quite likely that price will get stuck there. When you see orders like that, think of it like, there was some big guy, he got caught and he got out, and now there's no more reason to try and push it. And all of these guys that are putting liquidity out there, like, are you going to offer above that? I mean, who wants to put a bid here when you know you could get here? Like that. Sorry, that didn't make much sense. How do I explain this? Like, if you're looking to buy, and you saw that there was a ton of volume right there, why would you come down and wait for it to come all the way back like 4 ticks when you know that they're trading 18.5, right? You're going to get in there. And then all of a sudden, everybody that wants to trade ends up doing it here. And now, like, there's nobody left that wants to trade. It just gets stuck. You'll see it. I mean, it does it with icebergs too, but it's particularly if you just see a big order get. Have we had any today? Well, there was one at 17 was probably the biggest one. We really haven't had anything that would trigger that. Anyways, that makes sense, right? This is the Walrusian auction thing, right? The large order, everybody trades there, and now all of a sudden, anybody that wanted to trade at that location has already done so, and ergo, when you get here, you get almost only people that want to sell, and down here, almost only people that want to buy, and it's difficult to break that balance. YouTube Finance says, question mark, question mark? Well, in part 3 of the video, I think I'm going to try and go into it in a lot more detail. Henry says, thanks for that. It makes sense, and I've seen it before, but never knew why it would happen. Yeah, exactly. Like, I can show you the math, but intuitively it makes sense that, oh, well, if everybody that wanted to trade in that location already traded, then there's not going to be any of these guys that like wanted to buy and are buying into 19.5 and 20 and 20.5 anymore. They all did it at 18.5. So over here, you only have sellers, and down here, you're only going to have buyers. And since there's less people that want to trade overall, and the key thing that you're going to see, the thing that I think is the tell, and this is the thing that the model doesn't tell you, but that I've discovered, is that they just don't want to put liquidity there, right? Like what you're seeing right here in the 10-year, that's not it. That's not it. You're going to see a big transaction, and then after that transaction, they're not going to want to put more than like 300 on it. That's what you're looking for. And that's when you get this thing in the treasury where it goes nowhere. And those guys at the institution, when they're watching that, you know, they're like, oh, okay, fine, party's over. Like, because they don't, the big guy that puts that order out, I mean, if it was after a trend, the big guy that puts that order out, he doesn't want to do that. He doesn't want to do that. Like when you see something like that, so one side or the other got screwed. Maybe it was the big guy stopping out, but it could also be the other side, and somebody was putting more liquidity out at that price than they should have, and they just got had. Anyways, I'm really gonna try and re-record that during the week somehow. I mean, I've definitely got to work out today, but maybe we'll find time in the afternoon. Well, we got about 15 minutes left, but look, those treasuries are up at their highs and everything. I don't know. Maybe, well, I don't know. Like, so I'm thinking here, if the treasuries continue this kind of behavior into the FOMC, then that could make it even more interesting. Because what's going to happen if they're all thought that the FOMC was going to be dovish, or they're trying to price in a rate error or something like that, and then they come out and they're like, yeah, well, now we're gonna hike in June, and we're gonna have to make the taper faster than we expected, and you know, then you could really get some crazy things happen in the treasury. Now, what was this from Bloomberg? Oh, Michael Saylor. You know what? It's just a little scary to me that Michael Saylor comes out and says, like, you should mortgage your house and buy Bitcoin. And like, he still gets attention. It's just, he shouldn't. It's a very irresponsible thing to say to people. Thanksgiving items could be in short supply. Do I need to go and buy the turkey now? Maybe I need to go buy the turkey now. So I saw them at the store. Oh, wait, was this from Joe Biden? Healthcare should be a right, not a privilege? Wrong. I have to pay for it, therefore it cannot be a right. And with the beginning of open enrollment period today, we can continue delivering on that promise. Well, signing up is easy. Oh, that's funny because my open enrollment period for my work already just ended. Yesterday was the last day for me to do it, but now we're coming into when everybody else can do it. This is the busy time at my work. 10 years coming back down, risk off. You're talking about the yield, or you're talking about the 10-year price is up at its highs and the yields are at their lows, and it does appear to me to be because of risk off sentiment. I mean, it might be more than that. We kind of have to wonder, right? This still, he's talking yield. This is the thing that I'm finding so incredibly frustrating is that there's this argument, and you'll see, here, I guarantee you this is what's going to happen. Okay, yields are going to be down today, and then you get to the end of the day, and Zero Hedge will be like, and the yields continue to decline as interest rate traders price in a policy mistake by the Federal Reserve. That's what they're going to say, right? And you have to sit there and be like, okay, but was it really because they're trying to price in a policy mistake, or is it because the S&P 500 got slaughtered? I mean, come on. How do you know? At any time that we see the rates move up, there's like a really good alternative explanation for it. And so it's difficult, if not impossible, for us to sort out how much of that volume is the one thing or the other thing. But the timing and everything, S&P 500 risk off. So that's my leading theory. But I guess an interest rate policy mistake or economic slowdown, maybe alternative explanations. What's this? I'm just Bloomberg. Bloomberg sends me all sorts of messages in the morning. I kind of feel like turning it off, but climate talks kick off. Yeah, that's what you bother me with, Bloomberg. Let's see here. Evergrande must pay lots of money before Tuesday, the 10th of November, is excited about whether it will be a story from the market. I don't know, because I kind of felt like that the market decided that even though it was a big problem, that it was not going to lead to, a systemic collapse of things, that it wasn't really going to affect our markets that much. Yeah, see, here's this guy. Mark Palmer. Facebook or Meta is somewhat late to the game as it relates to the metaverse because the metaverse has been under construction now for the last couple of years. And that's within the construct of blockchain and NFTs and cryptocurrencies. Sure, if you say so. That's the only reason they're all excited about the metaverse now, is because it's another way for you to make money from cryptocurrencies. Bank of England APF gilt purchase operation cover ratio 1.72. Okay, I don't know what any of that is, but so I don't follow Bank of England very much, but that's interesting. They're seeing that now. Oh, you know what? We do have those no auctions, right? At 9:30. And New York Fed Treasury purchases. And Bank of Japan monetary policy meeting minutes tonight. Number one, that could have been absorbed. Number two, there could be a mark over the other way. TLA says good trading. Yeah, it is. I mean, with the whole metaverse thing, probably we can trade it. I'm just not so sure that it's going to be with Facebook. Is futures trading your main job? No. So I would having futures trading be your primary job is not really very realistic for most people, because the income that you generate, even if you're really good, is not really very consistent. And so you really have to have like a huge wad of cash to handle the drawdowns and still live, right? So it makes a lot more sense for most people to just trade in the morning and then have a day job, right? And that's what I do. And I do make some income from the stream. Like that's 100% totally. There's the income from the advertising on YouTube. And then when you guys click on the affiliate links, so I have a Jigsaw affiliate link and I have a Financial Juice affiliate link. And if you purchase either of those two things, then I receive a commission for it. And but I don't really use that as my income to live off of. Instead, what I do is I have that money in a segregated account and I use it to help the stream. Right? So maybe at some point in the future, the channel will grow large enough that the channel could replace my day job. But I don't think that I will ever try to live just off of the trading income. I think that's just too much stress for me. Yeah. It's just a hobby. And hey, like, look, I'm trading micro treasuries, or that's what I've been doing lately. Like I'm making $1 at a time. It's not, we're mostly just having fun. Doesn't mean that there's not a lot you can learn from it, but. And I kind of do that on purpose too, because of like, by the way, Jack, I thought you've been around for a little bit longer than that. Because I've seen your name more than once. Well, anyways, another thing is that I kind of don't want to attract the crowd that's like in it to get rich quick, right? So, when I keep things small and I don't make a big deal out of it, then I attract the people that are genuinely interested in trading in markets, right? Is it 8:55? I'll give you a few more minutes for a follow-up question, but it's about time that we get going here. Hey, make sure you give this video a thumbs up if you like that LED ticker in the background. I think it's super cool. I hope you guys enjoyed it. I got my mouth too close, and then the light is it covers the light. Oh, it'd help if I had this one on. Oh, I know why I thought I never plugged that one in. Oh, you asked another question. Is having a daily or weekly target of profit something good or bad for trading? Oh, okay. So I suppose it kind of depends on the target. So if you go in and you approach this like, I want to make X thousand a month, like I want to make $5,000 a month so that I can make over $100,000 a year, then yeah, that's a pretty aggressive target. And unless you're trading like a bunch of contracts, it's not really very realistic. Especially if you're just starting out. That's the other thing. Okay. But if you come in and you're like Ace and you just say, I want to get at least 2 points on the S&P 500 a day. And then once I've gotten that, I'll let it run beyond that, but that I'll never let myself go below that. And once I've done with that trade, I'm done. Right? That can be beneficial. But what it does is it can create a little bit of a fat tail in your distributions, because there's going to be that day where you don't win and you lose over and over and over again. So you might have a losing day that's just a lot more than your average win day, right? So there's problems with that. But at the same time, I have found it useful to come in and be like, okay, my goal is to pay for all of the costs of the data feed and everything, and come in and see how well I did, right? But I'm not thinking about that. I never take a trade because like, oh, I haven't hit my target, right? So part of that is like, if your target is large enough away that you're not thinking about it actively when you're taking the trades. But you've got to be really careful about trying to take trades to chase performance. That's always a disaster for futures trading. Always. China's President Xi, China will accelerate green renewable energy growth by planning large-scale wind farms and photovoltaic power projects. So if he's talking about that sort of thing, why wasn't he willing to come to the meeting that they're having? And that's kind of weird. Okay, well, anyways, it is time for me to get going now. Let's make the name of this video. Check out my cool LED ticker tape. Save. Okay, guys, I will see you tomorrow, and in the meantime, stay profitable.